Regional rural banks, commonly known as RRBs, form the backbone of rural banking in India, catering to nearly 40 crore people by bringing financial services to the nation's villages, small towns, and agricultural communities. Every RRB is co-owned by the union government, the state government, and a sponsor bank which teams up to provide capital, technical, and managerial support. Sponsor banks play a supervisory role, but the two entities are distinct in function, governance, and culture, a fact that's now at the heart of a heated conflict. For a long time, there has been sharp friction between major RRB unions and sponsor banks. Unions for commercial banks, the sponsor banks, are pushing for RRBs to be fully merged into their own operations. Their argument: merging would streamline technology, aid delivery of modern banking services, and reduce the rural bank's dependence on government funding. However, RRB staff unions strongly oppose this.
They try to lure the employees, saying that if merged, you will get all the benefits of sponsor bank. That is the only way. If you merge automatically without any fight struggle, you can get all the things ready-madely available. But we have told that is a bogus propaganda. These banks have come for a real purpose, to serve a real purpose. There is a need of continuing rural banks, exclusive banks. For the rural India, 70% population was there, now 65% still there. So there is a need of exclusive national level rural bank.
They oppose the merger, highlighting issues like interfering in the operation strategies, pushing of third-party products, and the heavy-handed influence of sponsor bank officials on RRB operations.
These people who advocate merger oppose the mergers in public sector bank by saying that it will lead for privatization. And what will this merger lead for? It will also lead for the same, no.
The terms amalgamation and merger sound similar but have a crucial distinction. According to some experts, amalgamation involves two or more RRBs joining together to form a new RRB entity, one that retains its regional character, rural focus, and institutional identity. A merger, on the other hand, means that the RRB is absorbed into a sponsor public sector bank, losing its name, its identity, and in many cases, even its functional autonomy. So, while both processes involve consolidation, amalgamation preserves the local touch, the staff, and a grassroots identity of rural banking. Merger, on the other hand, centralized control, often dilutes service delivery in rural settings and brings job uncertainty. For RRB employees, this is not just a technical or administrative issue. It's about survival, dignity, and continuing to serve rural India on their own terms. RRB staffs want amalgamation, not merger, for several reasons. Lawful backing. The RRB Act 1976 only allows amalgamation, not merger.
In the RRB Act, there is no provision for merger of RRBs. There is no provision. There is only one provision under section 23(1), that is amalgamation of two or more RRBs.
Identity. RRBs serve unique rural needs and wish to retain their culture and regional connection. Job security. Amalgamation retains jobs. Mergers in public sector banks frequently lead to branch closures, forced transfers, and voluntary retirement schemes. Operational reality. Past amalgamations increased coverage from 523 districts in 2006 to 696 districts in 2024, direct evidence of growth. Between 2014 and 2019, after several RRB amalgamations, over 2,960 new rural branches were opened. In contrast, during the same period, 3,400 branches of commercial banks were shut down after mergers. They say if the merger happens,
the private bankers will lose their competitors. The private bankers will become monopoly. So we are the real tough. We are giving the real banking, and that would be taken off from them. So money vendors will be once again engulfing those livelihoods, those people, rural people. So we oppose from the point of view of rural masses, from the point of view of privatization, from the point of view of employees, all point of view, we oppose merger.
RRB staff reports several types of discrimination and challenges. Delayed benefits. Sponsor banks have often received salary revisions and performance incentives months before their RRB counterparts, with RRB employees forced to wait for approvals. Staff shortages. Persistent vacancies, sometimes as high as 16%, lead to higher workloads and burnout. Appeals to sponsor banks to fill these posts frequently go unanswered. High-handedness. Sponsor banks deputing their own officers to senior RRB roles creates a climate where business is sometimes diverted to sponsor banks, and RRB staff face harsh targets and workplace pressure.
They don't have any agenda for strengthening of RRBs or continuing of the welfare of the employees. They started luring the employees through the chairman and general manager and the deputy officer. All of them are their members in the commercial bank. Through them, they started to divide us. They started to support the rival associates. And their demand from the beginning is, for all the issues, you merger in sponsored bank. Brahmin banks, you merger in sponsored bank, they are doing.
Lack of autonomy. Many RRB managers feel that their authority is undermined by externally posted officials, reducing morale and motivation. Here's a quote from an RRB official.
Chairman and general managers from sponsor banks create pressure to sell third-party products. If RRB employees don't comply, they face threats to resign or get transferred.
We have exposed in every aspect what way the sponsor bank playing negative. They are the management, they are also competitor. We have a branch, aside by there is a sponsor bank branch also. Our management sitting in the head office as chairman, general manager, deputy officer, they are helping their branches than our branch. Whatever good business comes first, they are diverting. Whatever good proposals come or good opportunities are, clearly they are taking. And particularly, those deputy officers sitting in head office as controlling officers, they are pressurizing our people to divert our staff energies towards fulfilling their business, trust-selling business, insurance, mutual fund, or whatever the sponsor bank, they are showing our finances under their category.
As of May 2025, the number of RRBs is down to 28 after the latest round of amalgamation from a peak of 196 at the start. The government and sponsor banks are reportedly pushing for further consolidations, aiming for one state, one RRB policy. RRB unions are demanding fair pay, end to deputations, and a halt to forced mergers, insisting that proper amalgamation, as per the law, benefits banking coverage and protects rural employment. Staff shortages, managerial misconduct, and operational discrimination remain common grievances. During major meetings and public campaigns, union representatives have voiced strong opposition to moves like initial public offerings, privatization, and merger, fearing these would erode the rural development focus and job security that RRBs were created to protect. Instead, they insist the formation of National Rural Bank of India as a dedicated, government-owned national bank for rural India is the solution to persistent problems, such as pay disparities, inconsistent management practices, staff shortages, and lack of infrastructure in many areas. Their vision for NRBI is to bring all RRBs together under one umbrella, ending sponsor bank control, ensuring adequate recruitment, creating a single pay and promotion policy, and amplifying government investment in technology and branch expansion, so that the needs of rural people remain the top priority.
Now the demand of ARRB is very correctly they are projecting the demand. Why they are demanding it? What is the case for merging it with the public sector? See, as far as regional rural banks is concerned, they are largely situated in rural semi-urban. 92% of the branches, there are about 22,000 branches, 92% are situated in rural and semi-urban. And urban and metro, not metro, only urban branches are only hardly 8%. Now, what is the case in the case of public sector banks? It is hardly 50%. When the 92% of the rural banks are situated in semi-urban rural area, only 50% of the bank branches in public sector are situated in rural and urban area. Suppose you merge rural banks with public sector banks, your rural economy is going to be in doldrums. It is going to face very serious problems. And regional rural banks, they are extending 92% on priority sector, whereas public sector bank is giving only 40%. Public sector banks are giving very big ticket loans, but that is not the case with regional rural banks. And out of 92%, 70% is meant for agriculture. It is allocated for agriculture. Out of this 70%, 48% is for the poor and the marginal farmers. So, by merging these regional rural banks, the sector that is going to be affected is agriculture, and more particularly the small and marginal farmers. This is going to be the scenario. So, we cannot think of merging regional rural bank with the public sector bank. On the other hand, if you are able to form NRBI and expand it through branch expansion, they need capital, small capital. When public sector banks were given 3,10,000 rupees as capital in 5 years between 2017 and 22, they were hardly given some 11,000 crores capital in 2021. And since formation, the total capital given to regional rural banks is hardly 9,000 crores. They have to be given some more capital to strengthen, and technologically, there needs some improvement, and they have to expand. Now there are about 6 lakh villages. The regional rural bank branches are hardly 22,000. There must be a phased manner of expansion. Every year there should be 10,000 branches like that, 10,000, 15,000 branches. Up to 1 lakh branches, the regional rural bank should be covered in 5 years like that. Then the entire rural economy can be taken care of by the regional rural banks. Now what is the scenario? Despite regional rural banks, despite cooperative banks, despite public sector banks, more than 50% of the regional rural people are now still pushed towards microfinance institutions or non-banking financial companies or usurious money lenders or landlords or somebody. So these are the people they are pushed towards. So, and the interest they are collecting is 48%, 60%, 72% also. And the money is collected not every month, it is collected every week also, every 15 days also. The poor people are now suffering like anything. The rural people, they are not getting money properly for their needs. So, if you have to save them from the clutches of these MFIs and non-banking financial companies and the landlords, the regional rural bank is the only solution. They have to be strengthened, expanded, and technically they have to be supported. Then we can definitely see a big change.
RRBs remain essential for rural India. They are key to direct benefit transfers, agricultural loans, and empowering poor and marginalized communities. The outcome of this conflict will reshape how rural India accesses banking and will impact the lives and careers of thousands of bankers. The concerns and opinions shared by RRB staff deserve public attention as policymakers decide the future of these vital institutions.
Share this video and stay tuned on Kanal for exclusive coverage of the RRB and everything you need to know.